Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Tuesday and another volatile day, another day of, I don't know, misdirections and quick moves that turn into slow moves. And, you know, I'm trying to wrap my arms and hands around why it's been so frustrating for so many traders. And even for myself, you know, I was talking about it on the virtual trading floor, how, you know, traders are having a hard time getting traction. Anyone who's looking for follow through, looking to stay in a move for, you know, more than a day or so, you know, and if you add to a move that's actually working, then all of a sudden you have to take a lot of pain in it, and there's just like a lot of, or lack of continuity. And I guess, you know, for momentum you need continuity. You need, if we're in a downtrend, you make, you know, lower lows and lower highs. If you're in an uptrend, you make higher lows and higher highs. And if you have breakouts that could work, usually there's a tight level, gets above it, stays above it and goes. Same way to the downside, breaks below it, stays below it, and you could short it. And it seems like a lot of these type of trades that we've seen, you know, over the course forever are traps. I'm not saying like the computers could trap us all, but a lot of them have felt as if, you know, the right trade has turned into the wrong trade, and, you know, you can't feel comfortable that way. I guess you look at the chart, you know, and rightly so, right? Anyone that was pounding the shorts here into this level probably got frustrated. Okay, this actually move was probably the one of the most, you know, methodical ones, where you had your reversal, quick move up, broke above this mini downtrend, held there, and then made new highs. That one, you know, was at least a little bit more fluid. Above the 8-day, you had some stocks going. That probably right there was one of the best ones that, you know, of the year. And then, you know, here's when it looked as if we were going to break lower again, and we did not. So any shorts who were trying to short into here, every down open that, you know, was down 240 points in the first 12 minutes, you know, didn't get follow through, actually went up. And then, you know, this tried to do sort of the same thing here as it did here. And I guess didn't have as much room. And then, you know, and then this is just this whole little spot here has been such a choppy mess, where it feels like every time there is a misdirection, it's fast and furious. So what do I mean by a misdirection move? Meaning, like, if you close in the dead lows and you're looking for a downside follow through, and then all of a sudden the next day we open up 10 handles, you know, all of a sudden we're up 25 handles by 9:40 or 9:42, and then that's it for the day. Same way if you know, what's it called, on the flip side, if you're playing for an upside move and you're there, we open down 15 handles, go down 25 handles, shake everyone out, and then grind back up. So it's not making either side feel comfortable. So you go back to the chart of the SPX, and all in all, you know, if you try and take your emotions out of it, we're still in this upper channel. What do we do today? We held the 50-day, came back up into the 8 and 21-day, but we've crossed this spot. Let's see, how many times have we crossed this spot since February? I don't even want to count it. We've crossed this 290 area probably like 30 times. So, you know, with that being said, again here you look as if you know, you might break out to buy a dip. You buy a dip yesterday, or you position in on Friday, and then, you know, you get kind of purged out today. Same way here, you know, maybe you got short thinking that this time it's going to be different. This time we're going to break below the right side of this, you know, channel here, which we did. Okay, and maybe you get a small bounce back, you know, which happened here. But if you stayed short, you got squeezed all the way out, and then, I don't know, all we are is right here. So with that said, we're still 1.5% or so from the highs. You look at the indices, the IWM, still, you know, I don't know what it's doing here. It's kind of still rebuilding, ranging on the right side. You know, your continuity, you had your outside day failure. Today it looked as if this was going to get crushed, and it came all the way off the lows, and now, you know, I guess we'll pack and fill a little bit and see what's next here. It's still on the right side of that trend line. The IBBs, what'd you do? I guess after all said and done, you know, this just came into the gap and closed green, okay, and still above the support from, you know, I guess April, still in this, you know, somewhat of a range. And so that's where we are with them, with the individual action across the board. The financials, I guess you could say, you had a little bit of a reversal here on Monday, and it gave you some downside follow through and held higher again. But it's not that type of pent up trade. It's very loose and wide. Okay, so there you go, loose and wide. Loose and wide, is not the easiest thing versus pent up and tight. We like tight and expansion, not loose and wide, loose and wide, loose and wide, because it's harder to hold. So I guess that's a term that I'll just throw out there. So then you go to the stocks, and yesterday was the first time in a while that you had a pattern that made sense. We looked like we were going to break out. You had a strong momentum name. There was a key level. It broke above it. You could have made money quickly in the first half hour. It retested it in the next hour, and then made new highs, and that was Netflix. So that's fine, and if you took it home, you didn't have a way out of it. Okay, all in all, does it look fine still? Yeah. Did it hold this area? Yes. But now you have to sit through this while the 8-day catches up. I guess nice 3-day move. This was a breakout move. I haven't, back in the day, you'd have 6 or 7 stocks where you have a gap up, you have a nice flag, breaks out, and you could hold. You can get in tier 1 here, tier 2 here, sell back to tier 1, and then hold. Okay, but now, they're far and few between. Tesla was actually the stronger one today, but you never know. From day to day, you don't know which one's going to be the stronger one. And this one was the stronger one, and here you go. This was the breaking of the downtrend. Here's where it held after earnings, and it's still working its way higher. So if you've been swinging that, gave you a nice trade today. You could have bought it in the hole and added to it when it broke above this. So those two stocks are kind of the strongest high beta tech momentum names. Then you have Amazon, which was a little wishy-washy yesterday. You had your little topping tail there. I guess you could say they had a little bit of follow through. So maybe you're getting a day and a half follow through, where from here, all it did is come in and test the 8-day. So if you shorted there, you got out today, you made some money overnight. But again, it was hard to think that we'd be gapping down the way we did, and then now it held the 8-day. So this still, with a big gap underneath it that it held, is still deemed a stronger name. So those are the 3, strongest names in high beta tech if you can handle them. Google, still on the weak side, not very conducive. Below all the moving averages. All you could say for Google is, I guess it's holding this support, and Cooperman likes it, and that gave you a little 2-day bounce there. Failed here. It's at the lower end of the range and vulnerable. So that takes us to like other stocks. Okay, so today you would think, okay, some of the social media names have been weak. So if you didn't, if you shorted Facebook on that outside day, you made some money. But if you were waiting for some type of bear flag to develop, you definitely got, unless you took it real fast, there was no follow through. So this was your outside, this was your false move, which gave you a downside move fast, right? That 4-day move happened pretty fast. So I guess that was, follow through to this reversal when it failed here at 84.74. But then you look at this bear type flag afterwards. Okay, so here you are with this, pull down. 4 or 5 days consolidation. You would think with a weekday like today, perhaps, with the futures down, you're going to get some downside follow through, break below here, get to the 200-day or so, and you had if you press 77, you probably got hurt, because look how fast it happened, unless you covered it real quick. Look how fast that move happened at 77. So, boom. It happened in the first 15 minutes, but you would have thought that, okay, I'm going to get a real move here. So if you didn't cover real quick, you sat through a grind, and then you didn't know what to do. And you had to be really, really on top of that so quick. That's what I'm saying. Like, the move happened so fast, and then instead of getting, a second move, okay, so quickly you had to be there from 9:30 to 10, boom, and it happened so fast, so you had to be so prepared. So it does help to be prepared in front of it. Then instead of getting continuation to the downside, you get this wide range green bar, and you had to say to yourself, okay, maybe we don't get the downside because we're back above 77, which is the pivot. It only went below this for a second. So actually, you think about it, from 77.80, it really only went below the pivot for such a small amount of time, and then came back above and then just grinded its way. And still at this point, Facebook doesn't look like much. It looks like the stock's struggling to hold on to the lower end of the range. Twitter, a little, I guess, a green day with the takeover of AOL. There's a little. I guess I wouldn't want to be short this down here just in case, but it hasn't really given you the green light that it's going to start bouncing yet. YELP hung in there, even though there was a Wall Street Journal article saying that they don't think that they're going to get taken over anytime soon. You have a bit of a wedge pattern here, so you'll see what's next. Again, this too, to be short this, it just doesn't make sense to me now. It could go lower, but if there's a potential deal out there, you're better off just avoiding. There's other type of shorts out there where you don't need to be in this one. But anyway, if you want to be long 2 for a deal, we'll go out 2 months and buy options. Don't sit in it, because if there's no deal, it's been weaker. Then there comes Apple. Apple is, for me, you can come back to me. I like when there's continuity in Apple. I like when you get a strong day and then you get another day, or you get a break out of an area that holds and doesn't fail, or even stock goes positive, stays positive and continues, not flashes and comes down. And it's just, you look at Apple, it's obviously it's come a long way, from you had your big gap up. I wish we were back in here. This is when, remember I said iPhone to head, I see 100 plus, and that was down here at 80 when everyone said it would be Microsoft. So you had your first move, consolidation, another move, consolidation, and this time after earnings, it failed. So maybe we are asking for too much for it to continue. You look from a big stroke here, it's still well above this trend. So that's why maybe you have to be a little cautious, just in case the market does correct. It could go back to there, or at least to this. But if the market stays in firm, then perhaps there's a small chance that it starts to show some leadership again. And it looked like a little bit today that it was going to show some leadership. It went green first before NASDAQ gave you another small red dog reversal. Market was near the weekly lows. This wasn't. So it's worth being in some. And then maybe this takes us out. Maybe friggin' Carl writes his letter and says why it should be 200 plus, and it's not a great reason to be playing a stock, but it's, I'm in small just because I think that we're getting close, and each day it's giving you a trade away from it. So I guess instead of being long the indices, I feel more comfortable in something that might be able to go green even with the indices red, which just try it today. But ultimately, still has a lot of work to do. BABA, I'm still in, and it's just, what's frustrating about this stock is that, first of all, it was green to start, which was nice. In a sea of red, I had like 6 longs. At least BABA was up, then I was able to sell a little bit, and then when it came back in, I was able to buy it back. And then it got really strong well before the market. But if a stock gets strong before the market gets strong, you would think when the market regroups, it would get some follow-through. So instead, the market wound up getting traction and coming positive, and then it did nothing. So you look at BABA, and it has a nice tight pattern still. Okay, and I guess I want to see what the market's going to do, but it broke this downtrend here. So it's worth being in a tier 1, I would say, into this area. But, I'm not even buying strength. I'm just buying weakness and selling strength, and it's still not the easiest thing. So at some point, I guess, if it were to start getting above this 87.70 on heavy volume, maybe there's some traction. You have a gap here which shows some strength and some momentum. You have the moving averages playing catch-up. You have some decent news around it now, like Apple with their Apple Pay. You had Goldman upgrading it. You had decent earnings. There's some things more positive around it than negative, and it's pulled in from 120 to here. So it's a setup. If it were to break this area, 84.91, I will probably be done with it. But I'm trying to stay with it and watch it close. So if it does go and retraces maybe back to the 90s, the low 90s, or into this gap, I'm there for a trade. It's good to have 4 or 5 names you know very well, so you can make cash flow each day, trading the ranges, and then when you get a move, you could see it and sense it differently, so then you could really pound it. And that used to be my bread and butter with Apple, where I would trade it every day, make some cash flow, negative to positive, or open up red to, green to red, and then you would get some good setups where the setup, you get excited about the setup, do a call spread and be in the stock, and it would go. It's great to do that in a lot of stocks, but we're not having those type of setups in names where you're getting a tight pattern and you're getting a 3-day move above it where you could take your trade and high-five your neighbor. I guess maybe in some bios there were some things, and maybe in obscure names that I'm just not doing my homework enough on, but they're far and few between, especially I have a go-to list of 30 stocks, the best names out there, and they still have been hard. Even the financial stealth move wasn't the easiest. So today, I did a chart of the TLTs, and that's actually where I made my morning money. I was like, okay, the levels here where you broke your accelerated trend right there, then you broke your intermediate trend right here, This was when you broke the 200-day, retested, and then today was a little stretched. Everyone was talking about how bonds are crushed, so you figured you'd get a little bit of a reversal trade. So for me, I bought, where was it? Right here. This was my good morning trade. Right here, I was talking about it on the desk, 119.30, and I think I traded it. I bought some here, I added there, sold some, and I was done with the trade right into 120. Then it gave you a secondary move, which I was not there for. And then it trickled a little bit and closed in the middle of the range. So there could be some follow through tomorrow, but it stock's below the 200-day. It's below all the moving averages. It's kind of broken. So or the ETF for rates. So you're taking a little bit of risk just in case there's some European margin calls tonight by holding it. But from down here, you could trade around the position if you think that all of a sudden, this move was a bit too extreme. Plus, you also had a level going sideways. That's why I said I'd rather see you cover / nibble into 118 versus press a short, or sell down here. Your time to sell it was here. Your other time to sell it was there. Your other time was to sell it here, and even the retest. So down here, probably a better, buy / cover / trade from that area, and then we'll see what's next. And so here we are. What is it? It's May 12th, and market's still struggling. I think we've crossed the flat line on the down, the S&P, like 7-8 times this year. I guess it makes sense. We're in year 6 of a bull run. So we've had those momentum moves within the last 3 years, and and at this point, we're trying to figure out, is there another 100 handles left, or do we get our first 10% correction? So there's a lot of people that are uninterested in the market right here because they've made a lot of money. So they're like, okay, I could just sit back and relax. Same way, a lot of the asset managers are like, okay, I'm long in this area. Unless we break out and go, I don't need to add. And then you have the shorts who've been, trying to play for a move to the downside, haven't got paid either. So it's a lot of people not getting paid, except for maybe the computers that, have been programming the misdirection moves and the air pockets and the spurts. So if you happen to be that guy that's spinning your wheels a little bit, just don't get overly frustrated and don't start doing things you normally wouldn't do and lose more money than you have to. Just take a step back and realize, do you have first world problems or do you have real problems? Not being, trying to be, what's the word? Prejudiced. I'm just saying, like, everyone has problems, but, are they really problems? And just because if you've been fluttering and your P&L hasn't been getting anywhere the last 2 weeks or 3 weeks or even, for the first 3 months of this year, don't judge yourself that way. Just know that it's not easy out there. There is some money out there. There are some moves out there, but it hasn't been like they're giving it away, which they rarely do, but sometimes they're more fluid than others. And just do something to make yourself happy, get yourself even keeled, because if we do get some kind of resolution, you don't want to be the guy that, said, oh, I thought about that last week and now it happened this week, or I thought about that 2 days ago and now it's going. You want to, when the market confirms whatever you're thinking, you want to be clear-minded enough to jump on board. Have a good night. I'll see you tomorrow.